The S&P 500 and the Nasdaq 100, we look at the start of the day and we had a little bit of drawdown, as you can see. You can actually come back, pull that back up for you so you can see we kind of break down below this SR level right here. You can clearly see previous highs there. We wanted to hold above it, and now we're ending the day right below that level. But the big thing coming into tomorrow and overall trading is going to be Jackson Hole. Okay, that's what's going to really depict what's happening here. Early on in the day, we had some good upside pushing almost into 20K, a little bit over that. And then we obviously sold off after that, seller stepping in. But a lot of skepticism going into Jackson Hole's event. Now, if you remember last year's or the year before that, we've had dramatic ups, dramatic downs from this overall day. But it's basically your convention, right, where everyone gets together. They talk about what's happening with rates, the overall economy, and how we're moving from there. Now, a little bit of uncertainty that's taking place here is you look at like something like the 30-year yields, right? You know, you're seeing some indecision here. But what I will say is you're still very close to 4%. And if Jackson Hole goes well, you have to anticipate that yields break below 4%, signaling a lot of buying pressure on the overall market. Same thing with the dollar DXY. A little bit of a bounce though. Nothing great, but a little bit of a bounce from that support zone that we mentioned yesterday as well. All in all, I still think the market's in a very, very good position. Okay, everyone that's jumping the gun saying this is bearish, it's this, it's that. I want to tell you a quick little story. We went down, then we went back up. The end. That's what happened, right? Everyone said the crash was coming. It was the black swan. You bounced off of these local lows. You know, people that didn't buy the dip are still screaming, crying wolf. It is what it is. Now, let's say hypothetically that we come out tomorrow and Powell is like, hey, look, the market looks terrible. Unemployment's a major issue. We can't cut rates. Then maybe, just maybe, we see the downside. That's what I would be looking for. But as of right now, it's very important. And it's something that I keep saying on Twitter. And if you don't follow me on Twitter, I recommend doing so. The link is down below, so make sure you tap in there. Jackson Hole's tomorrow. Be very cautious of this action prior to the meeting. Remember what the Fed has continued to say, what they want to see in the market, and what the market is giving us data-wise. We're often overcomplicating what's been said and what has been said over the past 2 years. You know, I keep seeing people here saying the recession is imminent, it's this, it's that. You know, I'm going to tell you the same thing that I say all the time here, right? It's the very same thing, okay? Let's get rid of all these indicators so it's crystal clear. You know, maybe, just maybe, this year-long downtrend was your recession based on stocks, not maybe the economy. The economy and stocks are two different things, okay? Maybe that was the opportunity. You know, when was the last time you got a move like this to the downside besides COVID, which was bought right back up? You know, 2008, was that it? Was that our last recession? You know, but I'm just saying time-wise, you're playing with fire if you're banking on another major crash. And I think the market is giving you the clear answers to that as well, because you're bouncing very strongly off these levels as well each time these dips occur. Now, maybe, you know, beginning of the year, based on presidency, things like that, things change. But in short term, the market still looks very good, right? That's the Nasdaq. You go into S&P futures, you know, S&P futures are even higher. You came into 566, rejecting, but you still look really good, okay? So broad market, that's my viewpoint there. You like it, you may love it, you may just hate it, but it is what it is. IWM, okay, a little bit more here. IWM still holding your level 212, looks fine. But again, like I said, Jackson Hole, main thing on my mind, okay? SPY pushing up into highs, fill the gap, kind of just chilling there right now. QQQ, again, I would love to see us hold like 478. I would love to have seen that, but you didn't get it. We're just chilling down here. We could close above that by the end of the day, but we'll have to wait and see. But again, more things of just saying, as you're going into these big days, be a little cautious. And people keep saying, Tyler, do I buy this? Do I buy that? What do I do here? Look, I'll tell you very simply. When you get the big dips, that's when I'm all gun-ho about buying dated, deep contracts in the money, etc., holding. This is more day trading activity when you get like this. So understand the difference. Understand the difference. I want to make that very, very clear when we're talking about this right now. I'll give you a better breakdown of Jackson Hole tomorrow and what the Fed says, but I have to wait until that data comes out, okay? Now, we're going to go over a little bit more information here as well. Today's video is not going to be that long, okay? But I do want to just talk about the market as well. You can see a lot of red across the board. And what's worth mentioning is most of these were very green to start the day. NVIDIA, you know, you tested 131 on the day and closing around 124.5. Google, right, pulling back. Apple was a really nice push. You almost tested 230. You almost got above 228, pushing to 230 today, right? Amazon was above 180. right? These are all great looking names. Microsoft was pushing pretty good earlier as well. These are things that were looking good, but they quickly took a turn. So understood, I think they're very bearish. No, I think there's a little bit of drawdown, people taking some risk off the table based on recent events that have happened. But what's worth mentioning is there's a whole other side of the market that still looks good. And one sector that still looks really good is banks like JP Morgan, Bank of America, right? Wells Fargo. Now, why would these look good? Hypothetically, why would the bank sectors look good if there was concern about rates, right? If there was a real concern about going to Jackson Hole, what was happening with rates, you would imagine banks would look not so good, right? Banks won't perform well as long as rates are high. The second the narrative changed, banks are doing very well. So those are things to be considering. And again, understanding what parts of the market are heating up. Now, guys, this is Moomoo2, in case you don't know. This is the broker that I use for all my trading when it comes to options, everything in between. I use them for, everything here on the channel. So guys, if you're interested, the link is down below. They just open their cash accounts. There's a bunch of bonuses as well. You can look at the link. I don't want to butcher the bonuses, but you can check them out for yourself. Okay, we're going to come back into this here in a second. So again, I'm not going to go too heavy into options today of different stocks that I'm liking just because of what's happening tomorrow. If you are interested, I'll have some posts on Twitter hopefully later tonight or tomorrow. But yeah, so what I want to see here really quick, guys, is mainly the Nasdaq. Can Nasdaq get back above 19.7 and ultimately get back above 20K, start pushing back up? We want to see 19.95, same thing there. That's really big. Q's painting a really clear picture. 478 is what you want to see in relativity if you're not watching the Nasdaq. Okay. SPY, again, what you want to see here. Really, it's more close to this like 560 level. Above 560, I think you look really good. You're pretty illiquid, as you can see here to here, that there's not too much going on down there, as you can see. Not a lot, but a little choppy action. So again, don't favor the downside. Now, something that I did on the day here really quick was we went long and we went short. So number one, we went short on Snow. Snow was a good name in my opinion. After you broke, below 119, it was a clear-cut trade to the downside. Ended up hitting 117 was the target, and then went actually lower to 116, 116.5. Okay. The other side of this was Meta, and I'm going to go somewhere with this. Meta, we traded this to the upside. You broke above 539. We traded into 542, 543. These were both mentioned, as you can see here too. Just don't ever want there to be like misconception of me lying or anything like that. Make this really, really clear, as you can see, Meta and what's happening there. So again, as you can see right there. Point of the story here, guys, is I was talking about this being a day trading environment. Why is this a day trading environment? Okay, when you're getting clear movement and clear direction and you're moving, obviously breaking out, then you have opportunity to swing. But when you're getting close to a target or resistance, you have to slow down and kind of have a reality check, no matter how bullish you may be or bearish you may be. So again, when I'm going long, and this is something that you guys can practice every single day, and you may say, well, how do I know this? Again, there's a lot of other things we have on the website, stuff that's free and educational. Most of our education is absolutely free. But always do something, guys. For instance, I'm primarily watching the SPY all day long. Like 99% of the time I'm watching SPY and Qs. Okay. But I favor the direction and the trend of the market. What does that mean? So if I come into the market every single day and we're getting a little bit of a push up, but I'm not as certain, right, with the direction of the market, or that maybe we're buying into a value or a strong support on Nasdaq, right? But we're just kind of slowly going up, then I'm going to favor the strongest names in the market, right? And today, in my opinion, Meta was one of your strongest names. You hit all-time highs. Netflix was another good-looking name too. And then when we start to get a pullback and I'm going to trade that downside, then I'm going to try to go short on the weakest names. Now, Snow I knew was weak today because their earnings already gapping down. Even when the market was pushing up, Snow was still going down, right? Pushing back into those key levels as well. So again, focus on the strong names when you're going long. Focus on the weaker names when you're going short. Stop trading based off of hunches and feelings and emotions, and just trade based on the data, which is another big thing here too. If you go over to Moomoo, go to your Explore tab, right, you can really see where the strongest sectors are, what the strongest names, which ones are down more than the others relative to the market. So you can really understand what's going on there, right? So food for thought, things to be thinking about. Now, again, going into tomorrow, listening closely to Jackson Hole, we want to see what they're saying there. But again, another big visual here, and something I've been talking a lot about, is mortgage rates. Mortgage rates hits the lowest level here on the day, going back to 2023 in like March, I believe, right? So mortgage rates continue to drop. Worth mentioning, right? Things that we're looking for, all the signs that we continue to look for are still happening. And this is what has to get you excited when you're looking broadly at the market. So I'll give you guys more of a breakdown tomorrow as we go into Jackson Hole and what's happening there. But as of right now, I'm sitting a little bit patient, waiting for this to happen. No reason to get crazy because you know the IV is going to kick right back into tomorrow. You have VIX actually pushing up here towards $17, $18 here on the day. So again, relax, take a chill pill, hit the brakes a little bit because tomorrow I have a feeling we're hitting the gas pedal once again. I'll see you guys tomorrow. Have a good one, traders.